So let's talk about the weekly option. If you come into an option chain, you're going to notice that there's certain options that are designated with a W, as in weekly, and they're also going to have a specific date next to them, as opposed to your typical monthly options. Typical monthly options are going to be simply designated by the month and the year of the expiration. Though the monthly options are the ones that are going to expire on the third Friday of the month. But when you see these options in here that have a specific date, like 1 August or 8 August, and it's got a W next to it, you know that those are weekly options. And those are the options that I'm talking about and some of the strategic things that we can do with those particular trades. So let's talk a little bit about weekly options. Weekly options are going to function just like regular options. You're going to have both calls and puts. Like regular options, they're also going to expire on Friday, but here's the difference. They're going to expire on the Friday of their respective week that they expire. So instead of expiring on the third Friday of the month, they're going to expire whichever day they've been assigned to expire on that particular Friday. Oftentimes, what you're going to find with weeklies is they also have additional strike prices that are not standard issue, and they have very high volume, typically speaking, certainly the more recent ones. And so these are a few distinctions as it relates to weekly options. Let me give you a little bit of a history here on weeklies. We first started seeing weekly options showing up back in 2005. This is when the CBOE first started releasing weeklies. Now, initially, they only issued them 8 days before expiration, and that's why we called them weekly options, because they only had a week in the entire life cycle of this option. But in 2014, in January of 2014, CBOE made a change and they started issuing the weeklies 6 weeks before they actually expired. The reason they did this is because there was a lot of pushback from options traders that said, hey, I'd like to trade these extra issues, but I can't do it with only 8 days to expiration. And so they started issuing them 6 weeks to expiration instead of 8 days to expiration. And that allowed actually a few different strategies to start being added to these weekly options, one of which I'm going to share with you here in just a few minutes. What's really cool about weeklies is they've become very popular. There's a lot of liquidity in the weeklies, especially the ones that expire this week and the next week. That we've seen explosive growth in the daily trading volume, and so they've provided a lot of strategic opportunity. They're inexpensive. There's a lot of day trading value to them. There's also a lot of flexibility kind of within the next 5 to 6 weeks of which strike time period you wish to expire, or I should say which option time period you wish to expire. And of course, at the end of the day, it's just more volume for the world of options trading. So very cool and very good addition to the world of options trading. When are they issued? Typically speaking, we're going to see weekly options issued on Thursdays, 6 weeks before their expiration. Now, they're not going to be issued on weeks that would conflict with a regular monthly expiration. That's why I say typically speaking. On most Thursdays, you'll see some additional weekly options getting issued out there. You'll see them showing up on the option chain. But if it's 6 weeks before the next monthly expiration, you won't see any weekly options coming on board that month because the month or the week that should expire has already been issued with the monthly expiration. CBOE publishes the available issues. It seems like every year they're adding more stocks that have weekly options available. So you can go to cboe.com and you can see which stocks actually have weeklies to trade. An easier way, if you don't want to go to CBOE, if you're thinking of trading an individual stock, you just pull up the option chain on it. And if weeklies are available, well, you got weeklies that you can trade. And if they're not available, then obviously you can't trade them. Let's talk about some of the benefits of the weekly options. Benefits include the fact that they do provide a lot of options, a lot of choices in pinpointing your expirations. Whenever you're trading just the monthly options, you kind of are pigeonholed here. You've either got to go to 8 weeks out or 12 weeks out or 16 weeks, and so you've kind of got a gamut here that you've got to go. But whenever you have weekly options and they're spread out for 6 weeks, you can kind of really pinpoint in there which option expiration you want to get into. And so that's one of the great benefits of the weekly options. Usually, weeklies are also going to have additional strike prices, and so this is going to give you a lot more flexibility in terms of honing in on a strike price that maybe you want exactly. You're going to also see with a lot of the weekly options, this is where you see some of the 50-cent strike prices, so you can really fine-tune some of those entries. Also, since weeklies don't have a lot of time to expiration, you're going to have lower capital cost involved with a lot of the weeklies. And at the end of the day, they do provide a lot of great money-making opportunities. Now, while there's a lot of benefit to weeklies, there is a death wish wrapped up into the weeklies, and I want to remind you about that. That's the big weakness. The weakness is that there is a short time to expiration. There's not much time in this option. And as we learned in the last class, the time value can decay really, really fast, especially as you're getting into expiration. And so since it can decline very quickly, if your timing skills are a little bit weak, weekly options are probably not the option that you want to be trading. But if your timing skills are pretty good and if you really understand the option, then they do offer some values to you. There's not a lot of room for error though, especially if you're buying the option, so you really got to be careful about how you strategically create a strategy using these weeklies. Let me show you a picture here. Remember the theta curve that we looked at in the last class? We'll look at it here across the course of the weekly option. 4 days to expiration, we got 10 cents per day that we're losing. 10 days, we got 9 cents per day. So there you are in the last 2 weeks, and you're losing quite a bit. Now you go out to 17 days, you got 6.1 cents per day, and you got 4.7 cents if you go out 24 days. And you go out to 32, you're down to 4, down to 3.6, and out to 45 days, you're down to 3.2. So you see how that theta curve is really kicking in, kind of for the whole life of the weekly option. So that's one of the big downsides of the weeklies. The big downside is you've got a death wish right here for really the majority of the weeklies that a lot of people like to trade. And that's why they're dangerous, and that's why you've really got to understand the option if you're going to trade it. Otherwise, these weeklies will just wipe you out. Whenever you hear people talk about trading stock options and losing everything, oftentimes it's because they created a true death wish for themselves. They bought out of the money and they bought weekly options. And as you've learned already, that time value just decays so quickly, it's really a death wish. You're going to lose your money on that. So there's some rules that we can build around this, and that's what I want to do now is I want to create some strategies that we can use with these concepts in mind. Understanding the flexibility of the weekly option, understanding the time component of it. Let's see how we could strategically implement some of these things.